Are you thinking about buying a new vehicle this year? Well, you might want to think again. Here's the reason why. There's a major tax loophole for leasing electric vehicles that can help you save a majority of money on your taxes this year. I'm going to break down everything that you need to know about this loophole so you can take full advantage of it to start saving money quickly. What we're going to discuss in this video is the electric vehicle tax credits that have been impacted since the Inflation Reduction Act of 2022. I'm going to cover the loophole that was created with the tax credits, how long this loophole will last, as well as choosing the right vehicle for receiving this tax incentive. Without further ado, let's dive into this video. All right, guys, the first thing we have to discuss is the electric vehicle tax credits and the Inflation Reduction Act of 2022. People who purchased new electric vehicles have been able to receive tax credits for years now, but the government offers certain tax credit for electric vehicles, such as a credit up to $7,500 for new electric vehicles purchased, since these cars are more environmentally friendly and do not produce harmful CO2 emissions like their gas-powered counterparts do. However, the Inflation Reduction Act of 2022 revamped the cleaning vehicle tax credit, and some key changes for electric vehicle purchases were made. Here are some of the key changes, and more importantly, the key rules that now apply to the electric vehicle tax credit. Number 1. The electric vehicle tax credit was extended 9 years and is now available through 2032. Number 2. Used vehicles are now eligible for a tax credit of up to $4,000, limited up to 30% of the car's purchase price. And number 3, the car must have its final assembly done in America. And most importantly, number 4, to receive the full credit, more than 50% of the vehicle's battery must be assembled in North America. The percentage requirement increases every year until 2029, when 100% of the battery will have to be assembled in North America to receive the full $7,500 tax credit. And number 5, to receive the full credit, at least 40% of the car's battery's critical minerals must be extracted or processed in the United States or a country that the United States has a free trade agreement with. The percentage requirements will increase for this requirement too until 2027, when 80% of the car's battery minerals must be extracted or processed in the United States or a country that the United States has a free trade agreement with to claim the full credit. Now, number 6, which is for new electric SUVs and pickup trucks, manufacturers suggest retail price must be $80,000 or under. For sedans and passenger cars, the manufacturer's suggested retail price must be $55,000 or under. So as you can see, there are quite a bit of rules. But are these rules causing some problems? As you can see, there are now a lot of restrictions when it comes to electric vehicle tax credits when you buy an electric vehicle. As a result, many electric vehicles that used to qualify for this tax credit no longer do. And this could be because there are very expensive electric vehicles now, because the electric vehicles that are being assembled aren't being finally assembled in America, and because their batteries have too many minerals from nations without free trade deals with the United States. So essentially, a lot of people will now miss out on the $7,500 tax credit when they purchase electric vehicles. This is especially true for people who like to buy electric vehicles from foreign automakers who do their manufacturing outside of the United States, such as Kia and Hyundai. Now, here's the loophole I want to explain to you. The good news for everyone who wants to buy electric vehicles that do not qualify for the $7,500 tax credit, thanks to the Inflation Reduction Act rule changes, is that there is one provision in this act that still allows them to get access to the $7,500 tax deduction. A loophole was created by the Department of the Treasury in December of 2022. And this loophole allows a $7,500 electric vehicle tax credit to extend to commercial vehicles. But Karlton, what does this mean? This means that even if an electric vehicle fails to qualify for the $7,500 tax credit for vehicle purchases by not being compliant with all of the new rules, it can still potentially qualify for the tax credit for a vehicle leased as long as it is a commercial vehicle. There are no domestic assembly requirements or price caps or electric vehicles to qualify for the tax credit under the commercial vehicle loophole. You might be asking, Karlton, can you please define what a commercial vehicle is? I am here for you. I am your brother. All right, a commercial vehicle is a vehicle that is used for business purposes.
I mean business, 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 business.
And I know what you're thinking, but no, this doesn't mean that you have to start or own a business to lease an electric vehicle and get the tax credit. This is because when you lease a vehicle from an automaker or a third-party leasing company, the car is their commercial vehicle. What? So the way that it works is that the automaker or third-party leasing company uses the commercial vehicle loophole to apply the $7,500 electric vehicle tax credit. Then they pass the savings on to you. This means that you will be able to lease electric vehicles for significantly lower monthly rates than you would otherwise be able to due to this loophole. The tax savings are substantial for the companies that lease vehicles and then pass the savings right on to you. But let's talk about the impact of this loophole. I mean, the biggest impact of this loophole is that now you will be able to save $7,500. I mean, who wouldn't want to save $7,500 for thinking smart about how they purchase a car? This is great news for anyone who's preferred electric vehicles over standard vehicles. Do you see what I'm getting at here? So for example, let's say that you were thinking about buying a Hyundai Ioniq, which is one of Hyundai's most popular electric vehicles. Thanks to this new rule, you would not be able to get the $7,500 tax credit if you buy the vehicle, and you would have to pay full price for it since the car is manufactured in South Korea and Indonesia. But now that you know about leasing loophole, you can instead lease a brand new Hyundai Ioniq 5 and qualify for the $7,500 tax credit. This means that your monthly payments will be significantly lower, which makes leasing a lot more enticing. Now, the fact that leasing electric vehicles is going to be a lot cheaper thanks to the leasing loophole from the Department of the Treasury will likely create a strong increase in the amount of electric vehicles that are going to be leased. Although a large percentage of the increase in demand will likely come from people who already prefer electric vehicles, it is possible that tax credits could entice many people who previously preferred just gas-powered vehicles to then go down this leasing electric vehicles route. But to understand why this might be the case, just imagine people trying to choose between leasing two vehicles of comparable quality, right? However, one vehicle is electric and the other one is not. In this situation, many people would choose the electric vehicle simply because the monthly payments will be significantly less. Of course, price is not the only variable, and some people will not switch to electric vehicles, period, because they love gas-powered cars, right? However, price is still definitely a significant variable that is likely to influence many people when it comes to car leasing decisions. The next thing we have to discover is, will this loophole last forever? Currently, the electric vehicle tax credit rules created in the Inflation Reduction Act are only set to last through 2032. So make sure you write that down, as I mentioned before. This includes this loophole. However, it is not clear what will happen after 2032. We don't have information on that yet. Although this loophole is highly beneficial for consumers and many auto companies, not everyone is a fan of this loophole or others similar to it. For example, Senator John Manchin of the Senate Energy and Natural Resources Committee has been pushing to close loopholes related to foreign batteries for electric vehicles since winter. It is possible that leasing versus buying loopholes for electric vehicles could be targeted next. There is no guarantee that this loophole will last until 2032 or beyond. So what this means is that if you want to take advantage of this loophole, then you should go out and start looking at leasing a vehicle sooner rather than later, because you never know if Congress will make changes to the electric vehicle tax credits. But for right now, the loophole has not been closed. So it is still a great time to go out and get a lease for an electric vehicle that will most likely be much cheaper than it would have been otherwise. Now, here are some common examples of electric vehicles that qualify for the $7,500 leasing tax credit. A wide variety of vehicles qualify for this tax credit, but here are some of the ones that are most common or most notable. The Audi Q4 e-tron, the Audi Q5 55e, the BMW i4 eDrive 35, the BMW i6 xDrive 50, the Chrysler Pacifica Hybrid, the Jeep Grand Cherokee 4xe, the Hyundai Ioniq 5, which we mentioned, the Hyundai Kona Electric, the Jaguar I-Pace, and the Lucid Air. And last but not least, one that I've been seeing coming up more often is the Mercedes-Benz EQB. Guys, these are just some of the many cars that qualify for the electrical vehicle credit. But the next thing we have to decide is, how do we choose the right vehicle for a lease? Although the leasing tax loophole for electric vehicles is extremely beneficial, this should not be the only thing that you consider when you're buying a car or an electric vehicle. You should also consider other factors like quality of the vehicle, whether an SUV or a sedan is better for you, safety features. Also, keep in mind that although some companies will pass the full $7,500 savings from its tax credits on to you, other companies might keep some of the savings for themselves. So you can ask the company directly whether or not the full tax credit gets passed on to the customer. Keep in mind also that even if the tax credit lowers the monthly payment, you should still only lease a vehicle that you can properly afford the payments for. Because the United States Department of Treasury created a loophole that gives you a $7,500 tax credit for leasing electric vehicles, it is going to be significantly more attractive now to lease these kinds of cars and trucks moving forward. This loophole means that it is now much more affordable to lease a high-end electric vehicle, such as like a Tesla Model S. So now could be an excellent time for you, your family, to lease one of these kinds of cars. We don't know exactly how long this loophole lasts, so don't wait too long to take advantage of it. That's all for this video, guys. If you have any questions at all about the electric vehicle tax loophole or any type of tax deductions as it pertains to your vehicles, you could find a link in the description below to schedule a complimentary call. You can also find a link in the description to Tax Alchemy course. This is a course that I've created in order to share the absolute best and most advantageous tax saving strategies with you. There are some strategies inside of our course that are utilized by the wealthiest Americans to minimize their tax burdens every single year. So feel free to check that out. If you guys love this video, go ahead and like, comment, subscribe. It helps the YouTube algorithm and it allows me to make more for you. I'll see you guys all on the next video. Thank you so much.